the important thing though that almost everybody seems to be saying is that the market is being driven by passive ETF flows. Now, is that true? Even if it's true, is that the principal reason? And what is it that the global money bags are talking about India after such an important verdict has come out? Viewers would remember a few weeks ago, Karun Marwah of Motilal Oswal Financial Services had joined in to speak about that behavior ahead of the event. Now we're getting him after the event to talk about the same thing. Karun, good having you. Thanks much for taking the time out.
Hi Neeraj, hi Navni. Thank you.
I don't know if you got a chance to travel after the event or no, but I'm sure you've gotten a chance to talk to some of the large money managers.
Yeah.
What is the common thread, if there is one, that is coming out of these conversations?
Haven't been on the road after this, Neeraj. We've been busy pretty much out here. But yes, I have been speaking to investors. Thank you for having me over here. I think a common linkage that you're seeing is I think people were seeing this as an important event, right, to, let's say, lay out the direction for us. For us, as we see the election and having been speaking to people for many, many years, I think the verdict is extremely transformational in view of how investors will look at India. I think, when you're investing, you're really looking for a few key ingredients. You're looking for stability, continuity. More importantly, you're looking for experience, right? And last is vision. If you see every signal that this mandate has given for an investor is these four attributes. Here is an experienced government that's shown you what they've done for the last 5 years, and now they're signaling what their plans are for the future. But more importantly, for a foreign investor looking at a stability, continuity of the passage that you had in the past will turn a lot of eyeballs towards India. For many fence sitters, they're going to look at this asset class a lot more seriously than I would stick my neck out and say that they have seen in the last 15 to 20 years.
Now, are people already talking about that to you? I mean, I don't know if
Indeed.
you got a chance to talk to fence sitters, but even if you got a chance to speak to people who are already invested, are they talking about enhancing their investments?
Absolutely. Look, I'm not saying the investors that we speak to are even driven to say that, okay, with the re-election of a progressive government, we're going to do more. But you've got to just see it from the window of, what was holding them back. And, we don't stop to think about, okay, it's been a great opportunity, has size, has growth, but why was capital not coming in? And I think, Neeraj, even last time I mentioned, I'm not talking about momentum capital. India needs productivity. Productivity is going to come from sticky capital. And I mentioned this, we are still at the tip of the iceberg as far as long-term sticky capital from pension funds and endowments come. It's coming sporadically. This event changed the way they have been investing and how much they're going to enhance and invest. Because look at what the mandate signals, right? It's saying that the electorate is saying that I am here for productivity, right? I'm waiting for capital to go after productive assets.
Yeah, no, I get the point. Sorry, Karun, and I'm sure Navneet has more questions, but okay, and we'll get into that too. But let's say this is the message that you, as an India representative, would be telling some of your key clients about the merits of investing because of the mandate. I was wondering if large sticky money told you ahead of the event that they would wait for a positive mandate to come out and invest fresh money, and if they are now saying that, okay, let's explore these conversations further and see whether we want to invest or not. Is that happening?
Yes.
Was the mandate holding them back?
Yes, the answer is clearly yes. To the size that they wanted to get in becomes a lot more easier for them to look at a longer runway than they saw in the past. So somebody, if they had 1% towards India, might say, okay, am I able to re-up that to 1.5 or 2%? And that's very sizable, mind you, for the size that they manage.
Okay.
Karun, the interaction that we've had with a lot of FIs post the verdict, and that's done now. The verdict clearly means now for the markets there will be continuity going ahead with regard to policies. There were a lot of measures taken in Modi 1.0. But tell us, going ahead now, what sort of concerns are being highlighted when it comes to the Indian market? Because there is liquidity crunch, and I remember one of the FI interviews, they said the devil lies in the details. There is still liquidity crunch. The GDP numbers, if you were to go by the recent ones, it's the lowest number that one has seen in the last 5 years. So do these factors come into play before putting fresh money now into play?
Absolutely. I wouldn't be denying, I would be wrong in saying that there don't exist risks or there aren't impediments, right? But again, the pool of capital that me, my team, and our company goes after the long-term sticky. So I'll address it from that prism, right? I think the larger complaint people have often had is the sectors that we can invest in India that show us a long-term runway are very limited. It comes down to the basket of consumption, comes down to the banking and financial services space, and which is why you'll always see lofty valuations to these two large constructs, and large amount of foreign capital has tend to go behind this. So I think investors continue to see that as an impediment to the entry over here, but they also see this event as a signal that, okay, you can probably have a large, more broad-based growth after this. You can do more justice to your 5,000 odd stocks that you have and go beyond an investable universe of 80, 90 or 100 stocks that everybody gets behind from foreign investors. So I think a mandate like this, the reason I get back to this is perhaps going to encourage private investments. The moment private investments come in, you will come to the 4 sectors where foreign investors have been waiting to get in, and might see productivity there and want to take a position as well. But the immediate term risk and impediment to people is about, it's back to the same old stocks, same old sectors, and how much are we going to continue to pay for that? So valuation will be an impediment in the short term.
Okay, and that's precisely, I think everybody's been talking about
Absolutely.
it. If one were to talk about the key reforms which from the FI community which they were watching out, I think one was GST implementation in IBC. Anything specific now, a new reform that they'll be watching out from Modi 2.0?
In my view, it would be land and labor. I think unless you're going to try to make a shift or fill the space that the trade war is giving us an opportunity, right, to get into manufacturing, but unfortunately it's really Vietnam and Indonesia that are capitalizing more on it than India is, right? But labor and land reforms stay the impediment to growing into a larger base manufacturing economy. I think they would love to see something in that realm. They would love to see more traction on the insolvency and banking code. I think it's, in my view, been the largest, most impactful reform of the last 5 years, way beyond demonetization GST. That's my personal opinion. I think they want to see a lot more assets get under the hammer and see assets get back to being productive. So they're seeing more on the IBC code. It's not just it's launched, it's about they want to see it successful. If you say 270 days, we would like to see it done within 270 days without exceptions.
So what's next for the large sticky foreign money to come in? The election mandate is done. If you're talking about whether, are you saying that the money will come in now if indeed this 2 or 3 of these things happen, or do you reckon that money will start flowing in? Part 2 of my question will also be the recent spate of flows that have come in, either post-exit polls or barring the first 10 days of May. Was it ETF passive money or was it something else? What is your sense?
I think it's been a mix of both. It's obviously more ETF money. Nevertheless, I mean, to answer your first question, I don't think there's another event or another reason or rationale to justify making an entry now. I'm very, very clear with this, and this is what I tell my investors. Look, India has outperformed every single EM and the EM basket over 1, 3, 5, 7, 10. We missed the picture, and this has come about when you didn't have the best going on. Start to think of the larger picture of, with most things in place, what it can be in the future. If you're going to continue to desist from getting into India simply on a valuation perspective, I think you're going to continue to miss some piece of the opportunity. I think the answer lies in seeing it beyond the next 2-3 years, correct?
And people are buying that argument? I'm just trying to think.
I'm sorry?
Are people buying that argument? I'm not saying it's not a valid argument. I'm just trying to think that are people buying that argument with a 3-year perspective, let me not miss the bus, or are people saying that, sky high valuations never stay. So we want to get into India, but at 22, 23 times, 26 times trailing or 20 times current, let's wait for a pullback. What are your clients saying?
I think investors have a 5 to 7 year perspective and more. I don't think they're timing it. I don't think they're concerned about. Yes, they absolutely will, right? Look at it. They have to meet their asset liability mismatches. It's not going to come by trying to time when you get into a high growth economy like us. So somebody with a 5-year plus perspective, I do not think timing is their concern, and I can already see it with clients we meet. They've started to put their money in pre-election and post.
Okay, and Karun, the interesting thing that I remember from our last conversation is that the set of clients that you talk to, a large portion of them are from the European region as well. We usually hear from people in the US region, Asia, through the Bloomberg network. A lot of people come in. We don't get a sense of what the Europeans are doing. Are they talking of really large money starting to come in over the next 12 months?
Actually, Europe, Neeraj, is something we're starting to work on. We've done a lot of North American capital now, right? So it's not the other way around. That said, our initial efforts towards the European region is still trying to discern what kind of periods people want to invest in. They're grappling with enough locally to be extremely distracted about.
Okay, fair call.
Okay, just a last question from my side. Within the EM basket, and of course China is the heartbeat when it comes to the emerging markets, but with the ongoing trade war issues between US and China, do you see any possibility of money reallocation within that EM basket? Do you also feel India could benefit out of it? Because now the reports are indicating Vietnam is the country which will benefit the most.
Yeah, but Vietnam doesn't have the size that India would command of China, Brazil.
Of course.
Yes, my answer is clearly yes, right? You just step back and say, where really do you, as a global investor, put your capital? I mean, one is the trade war, US and China. You know, somebody's just popped the party for China currently, right? I mean, are they large enough to come out of it? Yes, they will. But, you know, for immediate investors, it's discerning. You look at Brazil, right? After Bolsonaro, it started to move up, and early signs yesterday in the paper about, you know, recession probably hitting them late into this year. I do not know how many other single country large EM opportunities that exist outside the United States that can absorb the kind of capital that we're talking about. So my short answer to you is yes, absolutely so. I mean, impacts of the trade wars or slowdowns in other large economies is bound to benefit India.
No, so are you saying that clients are now starting to make, large clients are looking at India as an individual market and not necessarily as a part of the EM basket?
Yes, they've been doing so for some period of time. I think an event like this is going to make it even larger and larger, you know. And there are some that are taking an unorthodox view to India. I speak to a couple of investors that have a far greater weightage than the others, and others are, you know, part of the pack. And I think my message to investors is, I think your call now is not about India, where in India and what in India. It's about your asset allocation, and the magnitude of your asset allocation decision is going to be the harder one for you to take, and the more important one for you to take now.
Okay, Karun, I think we'll leave it at that note. Thanks a lot for joining and taking us through your view as to what the FI community... You have any more questions?
No, that's fine.
Sorry.
I think he's answered almost everything that we wanted to know underneath.
Pleasure to have you here in the studios.
Thank you.